Let's get right into this explainer. KOSPI 7847.71. That is the exact number anchoring our analysis today. We are tracking a massive, record reversal signal straight out of the Asian markets, and it is directly dictating the structural setup for the US Open. There's zero fluff today. We are jumping straight into the mechanics of how this works. So we're tracking this fascinating dual signal that just emerged from the Asian trading session. On one hand, you've got a high-stakes, record-high reversal, and on the other, a massive systemic reappraisal of the entire semiconductor supply chain. This is exactly the kind of structural shift you need to be paying attention to because it literally sets the tone for the entire global market. Now, check out this metric, plus 0.41%. The KOSPI actually managed to hold on to this gain today. And honestly, that's pretty wild. Why? Because it happened despite heavy structural selling from foreign institutions. The market basically absorbed a massive hit to the jaw and still managed to close in the green. So how did it actually pull that off? Well, a huge part of the answer lies in global macro shifts. Think of it as a sudden pressure release. The Iran ceasefire negotiations actually advanced through 4 simultaneous reporting channels. This immediately sparked regional risk appetite, completely pulling WTI crude down over 5% to $98.99 pre-market, and dropping both U.S. and Korean 10-year yields. Easing that geopolitical tension provided an absolutely critical macro tailwind. Section 1. Capital Transmission Path, the rotation mechanism. The dynamic here is like watching a giant puzzle rearrange itself in real time. Samsung Electronics hits this intraday all-time high of 300,000 Korean won, and then immediately, foreign capital structurally exits, executing over 1 trillion won in net selling. But that money didn't just evaporate. Domestic investors rapidly stepped in, caught the outflow, reappraised the supply chain, and surged that capital directly into highly specific subsectors. So what actually triggered that surge? A massive 1.55 trillion won, which is roughly 1.02 billion US dollars, MLCC supply contract from Samsung Electromechanics. This generated an immediate shortage anticipation signal for MLCCs, which triggered a massive domestic capital rotation and put immense, crushing pressure on short sellers in the sector. The direct beneficiaries of this repositioning flow are crystal clear. The money literally shifted lanes. Domestic investors snapped up equipment and fabless names that had individual contract momentum. Jusung Engineering rocketed up nearly 21% on equipment shipments, and Padu gained almost 10% following an SSD controller supply contract. So the absolutely crucial takeaway is how the index managed to stay positive. It completely relied on 3 simultaneous absorption channels. You had the macro risk-on environment from the Iran negotiations, a domestic policy catalyst driving up the KOSDAQ, and that huge MLCC sector demand signal. Together, these 3 channels prevented a total KOSPI collapse, despite a staggering 1.93 trillion won in total foreign net selling. But, we can't ignore the hidden risks here. Our first canary in the coal mine is currency. The Korean won depreciated by 0.66% to 1,518 won to the dollar. Whenever depreciation exceeds that 0.5% threshold, it automatically increases foreign hedging costs, and that significantly raises the structural risk for continued macro-level capital outflow from Korean equities. Section 2. U.S. Session Execution Mode, Establishing Trading Conditions. For the U.S. session, it all comes down to our ultimate validation line, the NASDAQ 100 futures pre-market level at 29,593. It's a binary test. If we stay above 29,593, the Asian semiconductor supply chain reappraisal and that Iran macro support confirm the signal is valid. But if we drop below it, the pre-market signal is unconfirmed, and we immediately shift into conditional volatility. Now here's the catch, and it's a critical transmission risk to understand for your portfolio today. The U.S. session completely lacks that Korean domestic capital buffer. We don't have those same retail and institutional investors ready to buy the dip and rotate capital. That means the directional movement of the Samsung Electronics ADR directly impacts large-cap semiconductor sentiment tonight, and it does so completely without a cushion to absorb the blow. Because of that missing buffer, the Philadelphia Semiconductor Index, or the SOXX, becomes your absolute key validation variable tonight. We need to see if the SOXX direction tonight independently confirms the exact same intra-semiconductor divergence that we just witnessed in Asia. Section 3. The final macro checklist. 10 a.m. Eastern Time triggers. All right, here is exactly what you need to be watching. First, We need WTI crude to continue tracking below $98.99 based on those Iran negotiations. That keeps our macro setup intact. Then, at 10 a.m. Eastern, the Michigan one-year inflation expectations must print below 4.5% to mutually reinforce the yield decline. Concurrently, Fed Governor Waller needs to maintain a dovish stance so the Asian session signal transfers completely intact to the U.S. Pay close attention here, because these are our exact invalidation conditions. If the Michigan inflation expectation comes in higher than 4.5%, meaning inflation expectations are entrenched, or if Waller delivers a hawkish signal hinting at a rate cut pause, the entire setup fails. The Iran yield tailwind gets offset and the Asian signal devolves right into downside pressure. So we are heading into the ultimate structural test of the market tonight. Will the SOXX index show the exact same divergence we saw in Asia, confirming this massive supply chain reappraisal? Or will the sheer lack of a domestic cushion drag the entire U.S. tech sector down? The ripple effects of this rotation could be massive for your portfolio. To get the answer and receive news on the closing of Asian stock markets before the New York stock market opens, please subscribe.